So I'm obviously here with my business partners, Steve and Paul, who have got a wealth of knowledge and experience with Mortgage Express, our mortgage company that's been running for a long time, almost 2 decades. What did I say? Mortgage Express? Oh my God, me. Hello, welcome to Inside Property and Finance, where we talk all things property, as well as how can we finance your deals. And one of the most common questions we get when it comes to our investors is how quick can we get access to funds? How quick can we get that finance? And there's two takes to this. And that is, what can you do as an investor to get yourself set up to move quickly, but also what can a broker do as well in order to help you with all things finance. So I'm here with my business partners. We've got Steve here and Paul from expressmortgages.co.uk. We've got a wealth of knowledge. You guys been in the business and the mortgage game for what, 20 years now or more? More. Of course, I can see in the grey hairs. But anyway. So let's have a little chat about that. So I think we should maybe start this off with, as an investor, what's some of the things that they should do to help a broker speed up the process, and then maybe we'll get into how fast is fast in terms of getting access to funds.
Yeah. Well, I'll think of a project that we're doing recently, which is a care home, and the client involved needed to. He thought 42 days to exchange contracts. So you think, fine, that's not a problem, or to pay the rest of his money. But then it turned out it's 22 days. Now, most bridging companies can wrap things up within 1 to 2 months, but inside a month with your lawyers and everything else, and valuations that have to be done, get all your documents across and underwritten and assessed, that's not that common. I think the average I was reading the other day is 58 days to completion. So we needed a fast lender. And I knew exactly who to go to. It was one of our team, Bilal, that was dealing with it. But he was off, unfortunately, so I pointed our case manager in the right direction. And the lender managed to get a formal offer in from when the application went off to formal offer in a day. Now, that might sound like BS, but it's true. And the reason they can do it so quick is because they do an automated valuation, and they've got in-house solicitors that are sort of working around the clock. Every sort of area of that process is nailed down. That's what they're known for, speed. They're a little bit dearer, but then, he's getting it for a good price, so it can accommodate that increase in interest rate. But what the client had to get to us, the basic documents that we need. Well, first of all, you need to know what's the purchase price, what's the open market value, if that's any different. What are you spending on the project? What's your plans with it? Does it have planning? Does it not have planning? ID, proof of address. It does depend on the lender as to the exact documents that's required, but it's not too onerous. And he got that across to us very quickly. We sent it into the lender and it was underwritten very fastly. So to get a formal offer means that they've not just given heads of terms, they've given proper credit underwritten terms there.
And that then gives the investor confidence to then go and conclude missives or conclude contracts to then go ahead with getting the funds released to then purchase the project.
Yeah, and this particular one didn't have planning. So it was a care home on 4 acres. And his plan is to, once he's acquired it, is to apply for planning, convert the care home, I think, into 20 odd units. And then in the grounds of these 4 acres, he can build however many properties. I think it was 12 or 14 or something properties.
So he's got so many options.
Oh, yeah. And there's an even bigger developer at the back of him that wanted to buy the site. And they've dropped the ball on it. They've not bought the site. Now he holds a strip of land that they really need for access to their bigger site. So they'll be offering him some serious money to be able to do that. But I don't think he's going to take it. I think he wants to develop out this site.
Yeah, no, he messaged me as well and says, if I don't get X amount of millions for that, then I'm just going to develop out. And I'm like, well, you hold the cards here, and sometimes when you're in that situation, then it's great. In fact, I found myself in the opposite. So I have a site in a phenomenal location in the south side of Glasgow, and I'm dealing directly with the owner of the site. And there's a connection there because we've got an element of friendship, and I've helped him previously before with this site. And then it came back to me and he's like, Paul, I just want to sell it. I said, okay, yeah, I'm happy to go ahead with it. So gave him what he wanted. And then through the legal side of things, we found out that an ex-partner of his dad, because he inherited the site from his dad, owned the ransom strip at the front, the access to the site. Now, this site here has got a valuation on the title for 15k, but for me to do that deal, I had to pay 100 grand.
Oh.
So that's the kind of opposite. It was
Yeah.
like a held to ransom, a
Yeah.
proper ransom strip, you know. So again, in your due diligence, you know, when you're looking at sites, but it still works, you know, in that sense there. But I think it's always important, again, when you're dealing with your broker, is that for an investor, you keep your records up to date so that, because I think I've heard this many times from you guys, the amount of times that an investor pushes a broker to get moving, to get terms, but where's the stuff that we need from you, you know, and you end up chasing up. And I'm going to put my hand up and say that I fall into that category as well. A simple little stupid refinance on a small buy-to-let, and oh my God, the amount of times the team chased me just for simple things, and it took forever. And then it affected me because I think I had rates that were so low, and then I missed out. And even though I've still got good rates, but I missed out due to my own, you know, my own doing, for not being proactive by sending simple documents over. And I always think that's good if you're working with a broker, especially what we try and not enforce, the wrong word to say, but at least encourage, is that our investors to get your details up to date with the broker so that they can move quickly.
Yeah. So there's some things as a broker we can hold on file, such as proof of ID. So if you've got someone's passport, driver's license, they do expire at some point, but they could be valid for quite some time. And if we've had that, you know, we've been able to certify it, hold on file, then that's great. Depending on the lender, sometimes you've got to recertify things. So we'll get into the nitty gritty here. But there's other things that tend to always be asked for, but you've got to keep access to them easily enough. So proof of address, it's got to be current, it's got to be within the last 3 months. Don't get your utility bills and throw them away. You know, throw the ones that are 4 months old away, but keep the ones that are within the last 3 months. Bank statements, and that could be personal and business, last 3 months, always have them accessible. It's a lot easier these days because of internet banking. You can often just go on and print them off, and our case managers will explain even the daft things like some lenders want them in colour and some want them in black and white. Trust, honestly, they're great at what they do because they know exactly what each lender wants, and so you're not sending applications with the wrong colour of photocopy. You know, it's crazy to think that happens, but it does. So those are the basics. What you can't legislate for is if a case is a little bit more quirky, a lender might ask for something in addition to those, and you know, that's where things can get slowed down. But again, this is where speaking with your broker in very clear terms is so important. If you've gone to someone selling and you said, I'm going to give you X amount of money, which is probably way below what they want, but I can get you that money in a month, we need to know that, because that actually not just determines what we're going to ask you for, but determines, as Steve alluded to, which lender can we use. So it's so important to be clear. If it's a straight bridge, so it's just to acquire something, that's a lot easier because it's just that asset as it stands, what it's worth. If you're going to be coming asking for bridging with development funding, which is obviously more complex, then be prepared for things like cash flow analysis if it's a really detailed, large project, but certainly, you know, a schedule of costs. What are you going to spend the development funds on as an absolute minimum? Don't come to us saying, I want some money in a week, and I'm going to take 4 weeks to get me joiners in, get me sparks in, and price it all up. So, yeah, that's probably the non-specific to the more specific requests that we're going to make to someone to get a case offered quickly. What I would like to clarify is this, though, because it really does matter. Heads of terms and an offer are two completely different things.
Exactly what I was about to bring up. So I think it would be good to unpack that, because you can get ahead of terms relatively quickly. But what we're talking here with this example was a formal offer, wasn't it, within 24 hours? Yeah. So let's just talk about the difference in those.
So heads of terms, depending on the lender, we can get them in 10 minutes. We can go online with someone, produce them in 30 seconds. Now, if you've got a broker who's actually realistic about what lender does what, there is some value to what they indicate the cost of borrowing will be, but in no way, shape or form is there any real substance to you will get that money, because it's just the lender's not seen some of Some heads of terms that we get from lenders, and underwriters never seen them. It's just come out of a system, and it's based on the headline numbers. What's someone paying for something? Perhaps what they're spending on it. What's it going to be worth at the end? How long it's going to take? And that produces the numbers. And we get so many clients who, they come to us with a project and we'll say, oh, that's not, this is what you're going to get. And they'll go, oh no, I've already got my bridging funds sorted. And you go, what have you got? And it's heads of terms and not worth the paper they're written on necessarily. Not saying that they don't have the place, because it's a good place to start when you're trying to appraise, am I even going to bother applying to buy this thing? Am I going to pay for valuation fees, legal fees perhaps? Or does the finance just look way too either expensive perhaps, or requires too much money going in, which obviously there's other ways we can help with that, but just on first take, am I actually going to invest a load of time going forward this project and perhaps paying consultants fees and things like that? That's what heads of terms are really there for.
So I guess this is why it's important to have a broker who works with a lot of bridge and finance companies, bridging and development, because they're not just going to go anywhere to get a quick head of terms. They're likely going to look at the deal because they appraise deals. But this is the funny thing about brokers, especially with us here, is that we actually look at deals, and we actually, before we pass it to any lender, we'll go back and forth because we want to be able to go to the right lender that we know that the head of terms actually holds some weight. It's at least going to take it to the next step, and it will be, likely going to get accepted. And I think that's important because, if you're dealing with a broker who is just going to go and get your head of terms and then put you through all the legal costs of extra surveys and another solicitor getting instructed, and it might still be a no. It might be, okay, you got head of terms, but for whatever reason, it's not going to happen. And if you've got a great broker, they're going to look at it and they're going to ask some qualifying questions to make sure that they're going to present the right head of terms with the right lender.
Absolutely. But this is where it's a two-way street, this. So the investor has got to know the numbers. So anyone can phone us up perhaps and say, I'm going to pay this for it, I'm going to spend X amount on it. And again, we even see some of these headlines and think, oh, there's a pipe dream waiting to fail, because they're going to build out at £50 a square foot or something when you look at the numbers. And sometimes things are not that glaringly obvious, and it's not necessarily because they're disingenuine people. It's maybe they're a bit naive, and without wanting to sound like I'm blowing smoke up your backside, this is why people should get educated before they get into things like bridging and development. For the cost of an education, you could soon waste it on a valuation fee, and know what you're on about, because before you know it, you've got heads of terms based on false numbers. You've maybe gone to auction. Let's paint the disaster scenario, but we've seen it. This happens. Yeah. They go to auction because they've got heads of terms. 10% goes down. Then they're into val fees, legal fees, and then we get the true deal, and it's just not possible for them perhaps, or it's just not possible at all, and it all falls over. So I know I'm bringing in a little bit of know what you're doing in education there, but also heads of terms isn't something that you should base your whole decision on. You need it
only on the way up here today from Wigan to Glasgow, I'm kind of smiling to myself because I've got a guy who's a construction professional, has been in the game for many years. He sent me this site he's looking at in Preston, and the first thing that was glaringly obvious to me was finance costs. So he's got his appraisal there. Shall I go ahead, Steve, on this site? Cost of finance, 6%. Now, so maybe he's getting mortgage rates confused with the cost of development finance, but development finance is going to be probably double that. You've got an arrangement fee, you've got the interest rate, and you've got the exit fee typically. And then you've got things like monitoring surveyors fees, you've got the cost of the valuation, like Paul says, you've got the lender's legal fees. That can be thousands of pounds plus your own. And I just think he's missed off so much. And then just before closing the application down, I noticed that his cost per square foot and cost per square metre were the wrong way around. Now, it's only a little error, but you think, well, what else is there? And I've just skimmed over this quickly on my way up.
Yeah. Here's the funny thing, when we look at one variable, which is build costs, right? Mm-hmm. Which, let's say that someone says, I can build it at this. even though with brokers, they can look at it because they look at enough and it kind of stands out, right? But let's just say that it's a number that the broker looks at it and goes, okay, maybe it seems tight, but we'll run with it to give you heads of terms. So you get heads of terms and then you end up committing to this deal and everything else. What we need to realise and remember is that the next step for the lender to actually release funds is for them to send out their own independent QS to look over and then actually to see the cost of each of the materials and the labour and break it all down. So it's one of those ones that you might think you can build it at this, but if it doesn't match and give the lender and their team confidence that you can actually deliver on that project at that price, you're not going to get the funds. So it's one of those ones that for me, and I know with Ian that you guys both know, is that we hone in on that. We need to get cost certainty around things when it comes to raising money. You know, we've had some quick wins that I've not even had a chance to fill you guys in just now because, you know, with one of our bigger developments that we're doing just now, we're procuring all the works and we're getting fixed price contracts in because we're getting to that stage just now because we're going to be on site very soon, and we've saved $500,000 on a lot of the bigger projects as well, which is exciting for us. And this is where you really start, and of course there's some other things that's going up a wee bit, so it's like a bit of a yo-yo. And that's the whole idea with bigger developments or small developments. It's that you need to have a good gauge of what it's going to be in terms of the cost to actually build. What's the typical cost in that location, in that area to build? And of course, it depends on the different types of construction companies you use. If it's a tier 1 construction company, they're going to be a lot more expensive, of course. And then you go all the way down to maybe a small construction team. But then from a developer's point of view or from a finance point of view, they want to know the track record of the construction company and the developer. Have they did these types of projects before successfully? So there's a few things that I guess that from an investor, prior to going to a broker and then just getting heads of terms, is to get better at their due diligence with the construction costs, and more importantly, when they put an appraisal together, make sure they get the numbers right in the right fields.
Yeah. I mean, even like gross internal area, net internal area, there can be a difference of 15% or so.
Yeah.
And then some people are basing their end values on the corridors and the communal areas. Well, you can't sell those. You're selling the apartment. So yeah, it's getting a real handle on all the different nuances, the construction, the finance costs, everything involved.
Yeah. Depends on the level of project, of course. I mean, you're talking about something really substantial and borrowing millions, and quite naturally, any lender is going to be right. Are these numbers right? The bigger, the more complex the project, they're all going to apply a certain amount, no matter what. But if it's more of a simple renovation of a property back to a condition that's acceptable, it's important that your numbers are still right, but they don't necessarily have to be as detailed. So, you know, we can work with people if they've not got peak debt analysis on spreadsheets and things like that. You know, it doesn't have to be overly onerous. But I think, you know, it's just got to be realistic. Yeah. And I think this comes back to a little bit touching on people wanting to force a deal because they're desperate to get a deal going and things like that. And it's like they convince themselves that, you know, plumbers are still working for £100 a day and everything else. Don't want to pick on plumbers, that would be unfair, but everything's gone up in cost. So your appraisal's got to be, you know, along the same lines. But again, this is where it's important to, well, any broker should see this. If you're dealing with a client, you need to know who that client is, like right to the nitty gritty of who's doing the work even. Because if they've got their own team, that will cost a lot less than if they're bringing in outside contractors. So when you go for funding for an offer, not heads of terms, when you go for an actual offer, you need to like hammer that message home to that underwriter. I don't mean necessarily, you know, in a brutal way, but how does the underwriter know if you don't tell them?
You've got to qualify.
Yeah, and it's like, look, we know that this bill cost looks light, but this is the reason for it. And that becomes part of the service that you should be giving. If they're bringing in, you know, your grade A contractors and that, and they're still telling you they're getting it at £50 a square foot or something, you know, and again, this is where, and we do it, we'll turn around to clients and say, that doesn't work. that is just not going to happen. Don't be paying that valuation fee. Don't be, it's obvious. And even when sometimes even when they've got the numbers right, as in the cost and the GDV and everything, they just look at a deal and think, oh, there's £500,000 profit in this. That's fantastic. But if it's not a certain percentage of the GDV, you're not going to get the funding. So again, it's prior to committing to loads of expenditure on valuations, QSs, legal fees. It could be your architect. Paul, you've been through this many a time. You can soon rack up a massive bill, and you've just not started with the basics in a realistic point of view. And if you're real, then you should be fine.
Yeah, what you've just said there is a good point in terms of what the project needs to produce in terms of profit for a lender to consider it. Because I had someone who came to me and it was like, Paul, there's like 300 grand profit in this deal, and he was so fixated on the profit. And anytime a site gets sent to us and it's already been appraised and it gets sent, I already go, okay, I'll take that appraisal as a pinch of salt. I'm going to run my appraisal. I want to break down all the things. But he never did that. He just took that as, that's it. And that's fine, okay. And he's looking at it, it's like, it's 300 grand profit. And he's so focused on this 300 grand.
It was a £30 million bill cost.
well, that's not as extreme, but the point is, because again, you should be looking for, as we say, is for a minimum, ideally, is a minimum of a 25% developer's profit.
Absolutely.
So on this one here, it was a 2.2 million GDV. So in that sense, there, the developer's profit you want to be seeing is closer to 600k, not 300, so double. And no matter how much I was trying to explain that, in his head is like, no, but there's like 300 grand profit. And I'm like, I know. Yeah. But that's what you need to keep in mind, because it's all relative.
Yeah.
And no disrespect to anyone, but I'm guessing that going off experience, 300,000 to him was a lot of money.
A lot of money. He's like, I'm used to, I've done, I think he's done 2 or 3 flips and made 30 grand here and 25 grand there. So in his head, which that's amazing. That's great. I'm like, look, you're doing something, and I like how he's thinking bigger and he wants to do more projects, because his mindset is, well, if I keep on doing some of these smaller ones, what if I just do? That's me done like my 4 years forecast in one deal. I was like, I know, but you can't just look at numbers like that and make that out, because
if you go for a deal that's 15, let's say 15% against GDV instead of 25.
Yeah.
And there's a problem in the economy or things outside of your control go pear-shaped, that 15 can turn into 5. And especially if you've got investors to pay back as well. Yeah. Geez, it's you're in sticky territory, aren't you?
Comes back to an earlier podcast that we did, wasn't it, about being prepared to walk away from something. And I understand 300 grand, if that's a lot of dough to you, I don't want to lose it, but you might end up losing a lot more than
What's
that.
the opportunity cost?
Exactly.
And the reality in that there, if you wanted to go ahead with that, once the broker looks at it and the lender is going to have a lot more hard money to go in there, like significantly more. It's going to be less that he's able to leverage because there's less profit in there. And so it reduces the appetite for lenders. The lenders are likely, because lenders only lend to a certain percentage of the GDV or the development that's required in terms of the funding point. So that there would make them short. They would have to put a lot more money in. So
exactly.
Yeah, so there's other things to consider as well. And I love it. Like I love when I hear investors thinking bigger. I asked a great question at the weekend's event there, and when we do a little Q&A session, and because I was staying through in Glasgow, I had a few drinks flowing, so it was so it was actually quite entertaining, the crowd. And one of the questions was, what was your top 3 lessons learned if you were to do it all over again? And one of them is that don't think that you need to have done lots of deals to get involved in a bigger development. In a bigger development, what is that? And it could just be as simple as building one home, or it could be a simple commercial to residential development where it's an old dental practice getting converted into 3 flats, right? It doesn't need to be like a huge big development. But for me, for the first 10 years or so in my property journey, a simple little commercial to residential of an old building to convert it into 3 seemed like a monumentous, huge, massive project in my head.
Yeah.
So I was, no, I'll keep myself, once I've done enough of these deals, once I've done that. And anything I ever did was never enough until, again, getting around the right people. For me, it was going spending 8 days with the $50 billion man, Dan Pena, who just blew my mind because I went there thinking, I've got some success, I flip properties, I've got a portfolio, I'm doing deals, I'm a somebody. And I realised very quickly that I was an absolute nobody. I'm in a room with people who do deals. And I'm like, yeah, I've been thinking so small and holding myself back. And I guess through what we do, our education, is that I try and instill that into people and think, look, you know, the same amount of effort, okay, a bit more, but goes into looking at one property that is looking at a bigger development. You know, it's only your own limitations that hold you back. So I guess that for us, and I know that we see it a lot, is that those ambitious investors, which I love to see, come in at the start with deals that are never going to work. And sometimes it can feel a bit harsh, isn't it? When you're like, oh, do you mean it doesn't work? Oh, no, like, should I even do this or what? But if you're persistent with it and you learn from that one, you keep on going, sooner rather than later, you are actually going to land on a good deal and you're getting an education through that process.
Yeah. A couple of developers that I know, I said, how many deals do you actually assess in a year? And between them, you know, small team, we assess about 100 deals a year, you know, which is, a couple a week. How many do you do, or how many do you look to do? 5 or 6. So like roughly 95% of deals, they kick into touch. And it's because they're very disciplined over their criteria. If it doesn't meet it, they're not doing it because they know that there'll be another one down the line that will meet it. And they've just got to be patient with it.
That's experience.
It is experience, yeah.
I know what you're excited when you're getting into property, of course you are. And again, I think that's what gets the better of people. It's like, oh, brilliant, I'm going to do it, I don't want to deal. But really, you know, look at that ratio.
Yeah, it is. And the discipline, they don't tie up emotion in it like most of us when we start, don't we? It's like old property. We have this innate love of property and we tie up emotion into that. And I think we do have to distance ourselves from it and look at the numbers. And if the numbers work, big or small, you just got to do it.
Over the weekend, you know, one of the members of Protégé, and Richard Swan put on something very similar. And it started, I commented on this post before I saw Richard's post, and it was a fella saying, had a fail. I've had a fail, because, you know, they talk about the wins, and some of them are on us to say, I've had a fail. And I was reading it, and the failure was that he'd been outbid on a property. Yeah. So I replied, I said, Gary, that's a win. Yeah. That is a win, because what you've done is you've stuck to your guns. You've made a decision. You've drawn the line where that becomes from a good deal to a bad deal, and you've walked away. The win is that. Yeah. Because I think it is.
It is. He's just got to reframe it in his mind, doesn't he? Because we're programmed to think that that's a failure because you've not got the asset, you've not got the deal. Yeah. But no, you've demonstrated self-control there.
Yeah. And I'm going to put a slightly different spin, not on that one, but something for people to consider and be mindful of, because I've got experience dealing with someone just as of late as well, who put an offer in and it wasn't accepted, so he missed out. And again, I'm of the same opinion. That is not a fail. No. But what he then said is, but I could have put an extra 15k on, and I think that might have got us. And I says, okay, if you put that extra 15k on, would it have still worked? Yes, it would have still worked. Now, here's to keep in mind, if you are putting an offer when it's a property that's on the market, you need to put your best offer forward. It's because you don't really have an opportunity to go low because there's other people bidding. Yeah. It's different if it's off market. If it's off market, of course, go in a lot less and you can work your way up. But just something to be mindful of with the way the market is, you know, again, goes back to doing your right due diligence and then you know if you still don't get it, you in with your best offer. And you did everything right. You've done your due diligence and you know. But never feel, I hate for someone to, and it's fine, the guy has got a reframe, it's like, yeah, I'll learn from this for next time, but I'd hate for someone to miss out with something because they could have put a higher offer in to still work. Yeah. Especially when it's on the market.
5 or 10 of those in, you know, or 10 or 20 of those in, sooner or later you're going to get a deal, aren't you? You just got to cover the ground and make enough transactions or enough offers.
It's reps, isn't it? You know, it's like reps. You've got to get your reps in. Definitely. I'm amazed that the amount of people who, because I deal with a lot of people starting off in their property journey, which I love because it's a blank canvas. And as much as people are an interest in property and they want to get their start, I'm like, go and start viewing properties. But what do I do? Do I put an offer in? What if I don't? No. Take the stress of putting an offer in out the equation just now. Just go and view property. Just go and get a feel for things. And then off the back of that, ask yourself, okay, well, go and view walk-in condition properties, then poor condition properties, and turn it into a game. Yeah. Go, what would I have to do to turn this property that's in poor condition into the one that I viewed the other day that's walk-in condition? What would I need to do? Well, I need to make the kitchen look like that one. I need to make the bathroom look like that one. And then this is how you start to play around with it and use it as a game for the first couple of months of your journey. And I say this because there's even people who have been in property, maybe have done 1 or 2 deals, but they're not doing enough reps. Because you're going to put in lots of offers, and the law of averages is you're only going to probably get a small percentage of them that you're going to actually get. And unless you actually get in the game, build relationships, put in offers, fine-tune your due diligence each time and get better at making offers. And, you know, it like anything, it takes a bit of time.
I think that's a great idea, to actually cost appraise a project. Whether it's a single unit refurb or a larger conversion or whatever, but go in there and look, right, new kitchen, $5,000, whatever it is, bathroom, $3,000, and walk round and go, look for problems. Are there any cracks I should worry about? You know, look at the roof, look at the chimney, and try and cost it properly. And ideally, if you can then, get somebody like a builder that knows what they're doing and say, what would you do it? Don't let them see your figures and test yourself against them.
Yeah. So
says the man who sat in the dark for 6 months because he didn't know how a trip switch worked.
Well, I have a good team around me.
You've learned.
Do you know what's wild with what I'm about to say? So I went to there's an American company that came to the UK. I was 19 at the time. Russ Whitney, if you remember them. And went along to the seminar, and I never understood much, if I'm being honest, right? Because I wasn't that clever. Probably still am, still not much clever. But anyway.
Very lucky, yeah. Just very lucky. Where's he like that?
And then never understood much, but all I really got was, I need to view property. And the first few properties that I viewed, because I booked in viewings, right? And I would go and view them. I'd come out and I would forget everything about the property itself. Do you know the anxiety levels at the beginning? I'm getting in and I'm going, what am I supposed to do here? Walking around, I'm seeing rooms. And my first few viewings, I was in and out in 5 minutes because I didn't know how long you're allowed to stay in here for and what's the questions you say to the estate agent and all of this here. And what I've realised, obviously, from doing this for a long time now and helping other people, is that you need to take that anxiety away with it and just schedule some time in and maybe go in and take some pictures. Maybe do a wee video walkthrough of the property, because you're going to forget some things at the beginning. Yeah. But if you've got pictures and a video, you can go back and review it, and, you know, at least you're going to then start have some lessons learned from that first or second viewing. And it's the whole improving each time. And that's where you feel discomfort, isn't it? Like, you feel discomfort at the beginning of anything you do. I remember getting my first mortgage agreement through, and this is back then, and I was afraid to speak to the broker and ask him, what does that mean? What is a tracker? What is this? What's APR mean? Like, honestly, and I'm looking at all the agreement and stuff, and I'm getting stressed out, and I'm afraid I can't ask him that question, and he's telling me to sign this, and I'm like, I honestly don't know what I'm signing. And what I've realised is that you should just be open. You know, it's just ask the question.
Definitely.
By the way, just you guys will have a laugh. I didn't even know the difference between gross and net yield until I was in my late 20s. I swear to fuck. Like, literally, everybody's like, gross.
Cheeky bastard.
He loves me with
I know, because it's the anxiety around numbers and jargon and everything else.
People feel such dicks, don't they, for asking that question, but they just got to ask it, you know, because you just want to be comfy that you're going into the deal with the right, you know, the right numbers, the right mindset, everything else. And it's a little bit like when you're onboarding investors. You said to me, Paul, you should speak to 50 of them first before you'll refine everything and it be spot on. Well, apply the same to houses and projects. You know, you're going to have to get the reps in, see lots of properties, and then you'll fine tune what you'll pay for it. And you'll probably then at the end of that be able to go into the same property pretty much and get it within 10% your costs or 5%. You'll get it really down to a fine art.
Yeah.
I was saying that, again, a little story about, getting your reps in. So a few years ago, a client always following up, can you give me some idea of numbers on this thing? And after a while, you do get a bit like, are you ever going to do something? So you start asking a bit more, don't you? The more they're asking, you find out they've not actually got any offers accepted. They're just going through probably been educated or whatever, which is fine. But it's funny, like this particular guy, he'd taken to literally someone saying to him, you need to put an offer in on as many properties as you can, as low as you can, because something will drop. Probably comes back to the guys who were praising 2 deals a week and only doing 5 or 6. So we all get that. But what turns out, when I started chatting to him, he says, I'm not really getting anything out of the agents. They're not feeding back to me and stuff like that. I said, so what you looking for? He goes, well, I've got this little gold mine area that I want to concentrate on. Yeah, you see what's coming, can't you? Yeah. So he's then taking this do your rep type thing and putting in all these offers and put them as low as you can to get, and one of them will pop up. But he's going to like 3 agents all the time, making them come out, show him around properties perhaps, put an offer in on every single one of them. And they think he's just a madman, an absolute nutter. And I said, no, it's right. So if something's just not going to work, don't waste your time. Don't waste the agent's time. Yeah. Because your reputation's getting degraded. There is a level, isn't there?
Yeah, definitely.
But he was literally offering on everything.
What was his offers like?
Like 20 and 30% below asking.
Right.
Yeah. A few years ago.
That's the problem, though, when you go to some, if you're getting educated or depending who you listen to, and I hate because people focus on the BMV, the below market value, and I've bought property at market value or over market value, and the deal still works because you need to look at the number holistically because you could add significantly more value, but it's just drilled into so many people, my offer must be 25% below the current market value. And the reality is, if you get good at this and you do your due diligence, you'll be surprised that you can still make deals work with very little discount.
Yeah.
Of course, deal dependent, but unless you know that, then you're just going to do what that guy did.
Yeah. So I don't think he found anything much, and we never heard from him again. So, but God loves a trier, as they say, and he was definitely trying.
I guess it's like if you're putting reps in. The best analogy I can give, let's say the 3 of us, right? We're back in our prime and we're all 18, right? Remember that time?
Long time
Obviously,
ago.
For me, with the ladies, I would just nail them straight away. You guys would take a lot of reps before you would pull, wouldn't you?
You think so?
Yeah.
I'd wait for your second best.
Yeah, that was my third best.
Oh, brilliant.
Reps, yeah. But the point about reps, you'll remember, is it's not how many you do, it's the quality of the rep that you do as well, isn't it? So,
very true.
Yeah, there we go. And I guess that makes you a good investor, because I think that in today's day and age, especially with social media magnifying a lot of things, there's this misconception that, you need to have this overnight success. Like, I can't stress this enough. And it's kind of a bit hard when people who follow me as of late, like when I started in property at the age of 19, right? So I'm showing my age here, almost 18 years ago. My first year in property, I did 2 deal trades, which is find a property that I couldn't buy myself and then selling it to an investor. Made £1,000 my first one, made £1,500 my second, and I got my first buy-to-let. That's all I did in my first year. Year 2 wasn't too dissimilar. Traded another couple of deals, made a little bit more, bought my first home. And it wasn't until the age of 24, 5 years in my property journey, did I buy property number 10. And I've shared the story multiple times. I only had 1 mortgage in my own personal name. The other 9, I was buying with joint venture partners because I couldn't get mortgages. So I would partner with someone, they would bring the money, they would be able to get the mortgage, and I'd have 50%. So my share of that income was just over £2,000 a month to allow me to quit my job and go full time. So I thought that was incredibly fast. 5 years. To build a portfolio of 10 properties. And okay, I've traded a few deals in between there as well, and then be able to be full time and start building a property business. And I think that people think that this needs to happen overnight. Now, of course, as we see all the time, people come through our project programs and stuff, they are doing it in a fraction of time, I guess, because they've got mentorship, coaching, support, access to a network, and great brokers to tap into to help them with stuff. So I think that for anybody here, you don't need to do this alone. as an investor who's trying to learn all this stuff, being part of a community, being part of a group where you can bounce off ideas, go meet for a coffee, and because it's not all just getting the reps with an estate agent to piss them off because you keep on making cheeky offers. It's actually going out there, networking, having conversations with other investors, other professionals in the game, and that's actually going to help you to sharpen your axe as such.
Definitely play the long game, be consistent. That's the thing, because most people don't. A lot of people can do it for a year or do it for 6 months, but ask them to do it for a decade, and they've not got the staying power. And that's what it's about over time, because property, it's a long-term gain, isn't it? And you can be doing it in your 20s and your teens. You can be doing it when you're 70 odd, 80 odd.
Yeah, this is definitely not like an alternative type of investment like crypto or stocks and shares. This is a skill set that once you understand it and get it, and you invest the time and energy into it, you can buy and flip property and build a portfolio every year for the rest of your life.
Definitely.
Yeah, it's crazy. And if you just get it right, it can be incredibly rewarding as well. And then you start to leverage more than just yourself. Now you start leveraging lenders. Now you start leveraging the idea of being able to do 100% funding and and being able to access and scale up and do a lot more. And this is what I love about this game, because once you realize that you can do a lot more beyond your own circumstance, your own resources, leveraging other people's money and other people's time, then that's it. You're on to a whole different game. It's exciting.
Definitely. And when you mix up with other people that are not just playing at the game that you are, they're playing at a game 5, 10, 20 years down the line, it really opens your mind, doesn't it, to what's possible.
Yeah.
Some people are doing that, so why can't you be doing that?
Yeah, on the theme of reps, it's like getting a personal trainer, isn't it? It's if you've got a personal trainer, they know you're capable of so much more. They'll push you to do more reps physically.
Yeah, there's no way you're doing the same on your own, is there?
Absolutely. So getting around an environment and a network of, something I like to be careful when I use the word like-minded, because sometimes being around like-minded people keep you where you are because they're like you.
Yeah.
You also need to be slightly uncomfortable by being around people who are further ahead on the journey that you want to embark on, because they've seen things that you've not.
Yeah.
They can guide and support and help. And if anything, most people are not going to lower their level to join you. It means that you're going to force you to have to level up your game.
Yeah.
So it's having a mix of like-minded people around you, but at the same time, getting yourself around those people who are further down the path, further down the journey, because that's going to force you to level up.
Oh, for sure. And those people that are further ahead, they'll love a tenacious person, won't they, with determination, the right attitude. They won't look down on you because you're further behind them. They'll admire your personality if that's you. So I think it's really important.
Yeah, and on a topic that we spoke about in a previous podcast, when it comes to, looking to go out there to get private investment, raise finance, you're going to raise more private investment with people once you become someone who is upbeat, positive, driven, motivated, getting results, making things happen, good energy to be around. You seem to be making things happen. It's like people just throw money to that person.
Oh, for sure.
Because they want to be around that energy. They go, I don't know where the fuck this guy's going, but he's going somewhere. Here, take money.
Also, if and when the shit hits the fan, they know that you're going to react so much better than the victim, aren't they, that looks for every excuse under the sun.
Yeah, absolutely.
So important, that.
And I guess this is just all part of the bigger picture of personal development, as well as learning how to be an investor and appraise deals and accessing finances. Who do you need to become as well? And if you focus on being the best version of you, and that's going to help you in all areas.
I was having this chat on Friday with some of the team at work about them getting themselves a bit further forward than where they're at. And I said, just think about it. If someone draws a line in the sand in front of you and says, jump past that line, do you know what most people do? They land just beyond it, or on it, or maybe just the wrong side of it, yeah. But that becomes their focus. Try and see further on. Get out your comfort zone, yeah. If it's not hurting, it's not working, all that kind of stuff, And it's amazing how people who... Don't take this the wrong way, Paul, but there's a lot.
Oh God, you're directing
I know, yeah, I know. But like yourself, who's done very, very well from property investment. I think there's a common trait in the people that we deal with who've done well, and it's almost like, and I've got to choose how to word this, haven't I? It's almost like they're not clever enough to see the failure. As much as you do your due diligence and things like that, there's a positive mindset of why not? Why? That's where they start. They don't start with I can't or it doesn't work. They start with, well, it does work, and then they find out through due diligence it doesn't. Whereas people who never ever go there to start with, oh, that's too difficult. That's too much.
And
I
some
can't
people
do
can
that.
overanalyze, can't they? I think when you know what you want in life, you're determined. You just don't see all the challenges and the problems at the side of you. You think, I'm being there. That's the short. I'm going that way. So, and that's the trait of an entrepreneur, isn't it? And the successful.
I see a lot of people in this game of property who operate with the engineer's mindset. And if you've got the engineer's mindset, it's like, well, how does this make work? Right? They want to know all the intricacies and everything else. And the problem comes with that engineer's mindset when it comes to property and finance is that they will probably overanalyze and second guess themselves and look for extra, information to the point that they lose out in a deal or never pull the trigger because they just lack that little bit of confidence. And I think going back to what you said there, I guess for me, because I knew my struggles at school with dyslexia and going back to the analogy of reps, I knew that for me to get good at it, I had to do reps. I already knew I was at disadvantage. I was so aware of that. And I was envious of other people in school who seemed to just be great at maths or English and great at doing their solo talk or great at sports and things. But for me, as much as I was sporty, I still felt that I had to put more in.
We didn't go to school, did we? I'm sorry. But, you've had to work that extra bit.
So when it came to finding a deal, I'm like, oh my God, I found a deal. This is going to be amazing. Then I do my due diligence. Oh, it's not a deal. And so rather than getting disheartened and getting upset and this is no for me, I thought, no, I know because of who I am, I need to put reps. And then from each time, I learned because I was convinced. You couldn't convince me otherwise from a young age that I was going to be a millionaire. You couldn't convince me otherwise. I became brainwashed to the fact. Now, that is so ludicrous to say because my environment, my reality at the time was you have got no chance whatsoever. Like
percentages are like so small.
Yeah,
so
it's just from my environment, my education, my knowledge, the people I was around, not having my it was literally wishful thinking. But see, because I just clung on to that and I knew it was like, it's just one failure to the next, and knowing I need to put more reps in and reading biographies. So when I read biographies of Richard Branson, who's also dyslexic, and understanding the same with him, he's kind of got the same trait where like he just went all in on something and made mistakes and then figured it out later on. I thought, maybe I'm doing something right if I'm following what Richard Branson did. He just threw himself into Virgin Records and started, importing records and all that stuff. Before he knew it, he was importing records that he shouldn't be and he's not paying import tax. He's going to get, all of this and he had to figure it out and deal with it. I'm like, shit, you don't need to be that clever. You just need to be driven and put those reps in and things will work out for itself in the end.
For sure. And then you can employ the academics, can't you?
I think I've just worked out where I went in wrong. Where Paul and Richard Branson were mindful on, I'm going to be a millionaire or a billionaire maybe in Richard Branson's case. I just set my sights on having a ride on lawnmower one day. I had to have a lawn big enough to justify a ride. Not just like I'm an idiot, I'll go and buy one and I don't need it. I live in an apartment block. No, I had to have a lawn big enough to justify a ride on lawnmower. And I got that at 31, 32. So that I think I lost my motivation after that.
So you should have had a Lamborghini tractor and a castle. There you go.
Yeah. But that is funny, I guess, to summarise this, because I know we do our usual and go off into different conversations and things, which I think is good because I think it's relevant for those people that are watching or listening, because I think a lot of people relate. But I've also found myself having accomplished those goals that, and I've said this before, that the goals that I set myself in my early 20s were so big back then that the 20-year-old Paul could not comprehend or even understand and know how he would achieve those. Then I found myself, once I accomplished and achieved those things, like the cars, the bigger house and the money, and which tends to be tangible, material things and money related, because when you don't come from, that's kind of what you want. And then when you start to achieving those things, I found myself in my late 20s, getting into my 30s, setting goals that I knew I can achieve that. Yeah. It wasn't like the goals I would set in my early 20s. I was like, oh my God, I have no idea how I'm going to get it. And that's a lesson in there. And it's almost like, oh, hold on a minute. Maybe I need to start thinking about the goals I'm setting again, make them so crazy that the Paul McFadden at 30, now I need to be looking at the Paul McFadden approaching 38. You know, what's those goals that really scare me? That you know, is it a jet? Is it a private jet? You know, is it
helipad in the garden?
Yeah, oh God, is it one of those? You know, because then you're starting to think the Paul McFadden mind can't even comprehend that.
No, I think you thought bigger than that. I think you were there at age 30 and thought, you know, one day I'm going to have 2 business partners from the northwest of England. That is my, forget the jets, forget the money, the cars. It was me and Steve, and here we are.
Yeah, I know you guys are trying to talk me to get a Porsche. Yeah, I know.
Yeah, but no, listen, just to bring it back to the seriousness, because I think what you're saying there is commendable, I do. You know, you've got to have that thing in front of you that, it's like it's the donkey's carrot on the stick, isn't it, that never comes closer. You've got to keep changing the carrot maybe at times, just in case you do grab hold of it and reset your goals. So I'm just wondering what I'm on the train home, Steve. Let's have a chat about new life goals.
New life goals. I was thinking the same as Paul was
How
talking.
about that? Yeah.
Let's change the Porsche. Let's change the Porsche.
You'll get a VW like you.
Oh, there we go. So I guess we'll bring this episode to a close. As always, we've had fun. Hope you guys have too. And if you've got any questions whatsoever, just pop them in the comments below. We'll be sure to go in there and respond. And of course, for all things finance, needing to access bridging and development or residential mortgages, buy-to-lets, all things finance, head over to expressmortgages.co.uk and we can help you out with all things finance. All the best and bye for now.